Good evening. My name is Rudy, and tonight we're going to be discussing basically how to go and select shares for equities, also basically how to do technical and some fundamental analysis on equity, so that you know exactly what to look out for when investing into equity. So we're not going to be discussing the CFD part of the software. So tonight we're going to be discussing the equity part of the software, where I'll be showing you how to do some filtering, also how to do the charting, and also what to look out for when you do fundamental analysis. So first thing, what I usually do is, and this is also how I determine basically the stock picks. So this daily stock picks that you basically get on Tuesdays and on Thursdays, this is more or less the way that I use to go and select the shares for the stock picks. So I either use the Edition Advisor or the share filter. Sometimes I find that the share filter works a bit easier to determine long-term investments rather than your short-term investments. Okay, so you get three different type of investments. You get your short-term investments, your mid-term investments, and then your long-term investments, where you can do all that through using the share filter, or you can go and use the Edition Advisor, which has that capability of selecting long, medium, or short-term investments. Okay, so with the share filter, what I usually do is, first thing, I change the date change percentage delay to greater than 0. Now, the reason I do that is so that I can find all the shares that's grown for today, which means I'm looking for positive shares for the day that's basically going up. Okay. Then also the price EO, not the price EO, sorry, the traded value. Traded value I changed to greater than 200,000. The reason we change it to greater than 200,000 is you want the value, the trading value for the company for the day to be more than 200,000 Rand. That's basically, it means that will be high volume also, okay? Not only high value, but high volume and a lot of deals that's gone through that company. Okay, the lower the volume is, the lower the value is, and the lower the deals is, it means that there isn't really a lot of people investing into that company. And what you're looking for is, you must ask yourself a question. All right, so this is a question you must ask yourself, is that where do you see this company within the next 10 years? Okay, even though you're only going to trade it for a year or 3 years or 5 years or even 6 months, you must ask yourself the question, where do I see this company for the next 10 years? Because I can always gain stuff like dividends, all right, by me to staying in that company. Okay, so obviously the more money I put into an investment, remember with investment you need to put a little bit more in than what you would do with a CFD. CFDs you put in margins, okay, so you get out more from the bank, but with equity you will need to put in more so that you can have a good growth, but over a certain time period, depending on how long you want to invest, whether it's short, medium, or long term. Okay, and short term meaning like 2 months to 6 months, midterm 6 months to a year, and then your long term obviously a year and onwards. All right. Um, then after I've done that, to try to value greater than 200,000, your digest percentage greater than 0, then I change that percentage change from highest. And this is another thing that you must remember, is that you can't invest downwards, right? Like with CFDs, you can trade downwards, where with equity, you can only go one direction, that's upwards. So you are looking for shares that's basically regaining value, shares that's fallen already, and shares that's basically going up again. So sometimes you might miss one or two that like fell like 89%, 89%, 56%. Some of those might be shares that's going back up. But what I usually do is, for me to get the best potential equity investments, I change this to greater than minus 15. So then I get a short list of shares that I can go and look at for a long-term investment, all right, instead of sorry, short-term, medium-term, or long-term investment. Okay, so what I usually look out for is stuff like triple sell. So it's a triple self indication would, for instance, be a share that's on a low point that's basically turning around again in an upwards direction. Or I can even go for a triple buy indication, which means that the moving averages, so there's a 20-day moving average, a 10-day moving average, and a 5-day moving average. All of those lines have basically crossed over and it's going in an upwards direction. Sometimes it is too late. So you can look for a triple buy indication, but it's recommended to rather go for a triple sell indication, because then it means that basically you're just waiting. So you're just waiting for those lines to basically cross over in an upwards direction. Okay. instead of taking a share that's already made some movement and it can turn around at some stage. But also remember, we are doing long-term investments. So even though it already starts to move, okay, then what you're going to do is you're going to set yourself up some parameters like a support and a resistance lines with some trend lines, so you can determine where the next breakout point is. All right, either basically through the next resistance line. So the moment it breaks through the next resistance line, then you can look at stuff like your RSI and your stochastic basically going in an upwards direction. So what I do from here is I click on a share, so like ABG, and then I click on Charts IQ, and it will take me directly to Charts IQ. I'm just going to remove all these other things for us. So once it opens the Charts IQ for me, then I can start pulling in, first of all, before we start off with RSI and stochastic and that stuff. First of all, what I do is I go and determine where my supports and my resistance lines are lying, and also what my trend is. So you go to select tool, you take your horizontal line, right? So first support and resistance, and you can change it to whatever color you want. So I can go with the white, I can go with the red, I can go with the green, or so whichever color you'd like. So this is actually white. So if I click on it, you'll see that it makes a white line. So now I'm going to determine where basically is the next level for this share to basically go up to before I can start investing into it. Okay, so we can already see that there was a line right over here. So there was a resistance point and there's current support. Okay, but I've got another point that I can aim for is basically up here. All right, so that is another resistance line. So currently we've got support, which was previously resistance, or previous resistance. So that was a resistance over there, but of resistance, and it went through. Now it's supporting on that line and it's going back up. Okay, now that is the next resistance line. So I can already start investing into this company because it's already bounced on top of this line. Okay, and I want the share to basically go back up to that line. All right. I just quickly want to, if you guys don't mind, just pause the session just for a minute or two. I will be back now. Sorry, I do apologize for that. Just a little bit of a small emergency, but that is sorted out. Okay. So we've already determined that we've got a support line down here and we've got a resistance line up here, but we can also aim for extra lines. So we can always say that that would be the next target. All right. And then if I zoom out a bit more, I can always see if there's the next targets over there. All right. So the highest point, that was basically the peak. So you can keep on drawing your line so you know exactly more or less what your targets would be. Okay. So targets in this case obviously would be to reach the top end. Okay, so we've already got established a few levels here. We've got a short-term investment going from there to there. We've got a mid-term investment going from here to there. Then we've got a little bit of a longer-term investment to basically reach the top point and maybe break out of that top point. Okay, so we can reach the peak and continue investing into the share. So what I usually also do is I zoom out of a share, all right, to see what the share's growth was over the last few years. So we can see from 2020, first thing is that the share has grown substantially from 2020. It did have a bit of a decline, okay. So obviously this was fundamental. So this fall that if you go and look it up, let's say on Google or even on the software, you'll see that within this drop is when basically when the banks didn't do that good. All right, so this was purely fundamentals why the share fell. Okay, but it's starting to regain its old momentum. Okay, that it had from 2020 up until November of 2022. Okay, so we've already got our 3 levels that we can reach. Now, next thing is we can already see the trend from here. Okay, so the trend is obvious in an upwards direction. But what I usually do is I go to the line tool. So go to your select tool, go to line tool, and then I pull in my trend line. Okay, so pull in my trend line. All right, so I've got my trend line set in. All right, so once I've got my trend line, I know that's the trend that the share needs to basically hold on to. All right, so if the share pulls back, it needs to pull back to the trend line and go back up. If it breaks through my trend line, it means it's done with the trend. Okay, we don't want the share to basically break through that trend. Another thing that you can also look out for, if a share has been in a downward direction for a while, okay, you can also determine it with the same line in a downward direction. So you've got your downward trend. Once it has a breakout like over there, okay, there's the breakout. That would basically be the end of the trend. All right, it broke out, it's starting to go back up. All right, then you'd look at other things like your stochastic and your RSI or your MACDs. Then you'll pull them in to see exactly what's happening on that breakout point. All right, because that would have been your main buy-in point for your investment. Okay, so I'm going to use that later on as a good example with stuff like RSI and stochastic and MACD. Okay, so we've already determined our supports and our resistance lines and our levels we want to gain. We've established our trend. Now what we can go and do is we can go and add in our RSI and our stochastic. So first of all, we go to studies, go to RSI, change the period from 14 to 3. You don't need to change anything else here, just create. And then I go to studies, go to stochastic, and then leave the period as 14. You don't need to change that, create, and then it gives me my RSI and my stochastic. And then one last thing that I usually add on top of the RSI, studies moving average, change the period to the same as the RSI, which is 3. Change the field to RSI, and then the type to exponential. And then now when I click on create, it's going to create this red line on top of the same as what the stochastic has, the RSI will have. Okay, so now basically that is just a signal line. All right, so you'll have the red line as your signal line on both RSI and stochastic, and then the white lines in this case, that would be the RSI on the RSI, and then the white line on the stochastic, that is the stochastic. So stuff that we would basically look out for is crossover points. Okay, so for instance, like over here, that would be a buy indication. Right over there would be another buy indication. All right, if I go back into history, there's a buy indication. There's another buy indication. And if you look basically at our main charts over here, where we have the trend line, we've got the breakout point basically over there. Okay, that breakout point was really close to the RSI buy indication and the stochastic buy indication. Stochastic buy indication was basically, you can say exactly that day when it literally broke out. Okay, that was the buy indication that your stochastic gave you. All right, and then your RSI basically predetermined the buy, all right, the breakout. But what you want to wait for, and that's why you create watch lists. Okay, so let's say for instance there wasn't a breakout yet. Okay, then you would have added that share to the watch list. So you just go back, click on add to watch list, and build up your watch list. All right, so that will go through later on. Okay, but add it to a watch list, and then once you see, okay, there's a breakout, then I would go and say, okay, right, it's already got the breakout, but I won't buy yet. Okay, reason being that even if you have that buy indication, you've got a buy indication there, you've got a buy indication there, you'll even see stuff like, if you watch my other videos, for instance, your bullish and bearish diverging lines. So for instance, like over there, I've got an upwards direction. Okay, so that basically determines whether the share is going to continue in that buy trend or not. So you'll see that it's like stairs. So it keeps on climbing the stairs up until a certain point where eventually your RSI would agree with a buying indication on your stochastic. Same thing over here. We had the climbing steps. Okay, but we'll see that we didn't have any, the price basically didn't go up from here. Even though you had the climbing steps, it still went down. But the reason for that is because your RSI was still going in a downwards direction. So it was still pushing downwards. Okay, so we would not have bought basically on those climbing stairs. All right, so where you would have, for instance, for a trade, that would have been a good indication for a trade, right? Buy there, sell there, right? That's a quick trade, but we don't want to do that in this case. We want to have a good investment. Okay, so I'm just going to remove those lines, and then I'm going to go back to my horizontal. I'm just going to change the color of the line, so I'm going to make it red. So now what we also want is, okay, we want the share not only to basically go up and break through the trend. You've got supports and resistance lines also to worry about. So first of all, we've got a bottom line. Okay, so there's our support line, and then there's our resistance up there. Okay, so we've got supports, resistance in that little channel. Okay, support and resistance. Now what we want is we want another breakout. Okay, we don't, so we've already got the share on the watch list. We've already got the 1, 2, 3, 4, 5 buy indications. So we've got a few buy indications already telling us that the share was going to go up in that time period. Okay, but we want the last breakout out of this channel. We don't want it to go in a sideways trend. The same thing, we had the same thing over here. We had this sideways trend. It looked like it wants to go through, and then just came back down. Okay, and then basically stayed there and then fell in a downwards direction. Instead of going back up and growing, it basically broke through that line and continued falling. Okay, there was another resistance. It went up, broke through that line, went there, resisted, and fell. All right, so it stayed in that direction. So that's why it's really important. It would have been really important for us to first break out here, and that's what we've got here now currently. Okay, we've got that current breakout. Okay, so yes, it is a bit overbought, but it's a good overbought. It's not one of those bad overboughts where your stochastic or your RSI is turning downwards. You've got that upwards direction. Okay, you've got your climbing stairs. Same here, you've got your climbing stairs. All right, so it's continuing in upwards direction. So sometimes you will find that yes, even though if your RSI is a bit overbought and your stochastic is a bit overbought, you can still invest into it. Yes, it is a bit risky because it can turn around. It would look like, okay, I'm losing a little bit of money now, but then from there on, basically, as I said, you've got your extra line helping you. You've got your trend line basically helping you. So even if it comes back down, we hope that it basically only comes back down to this line and then starts growing again. Okay, so because remember, investment will go up and down a lot. Okay, if we take this time period from, let's say, from September of 2020, okay, up until basically the peak, all right, we'll see that the share went up and down a lot. All right, there was at some stage that if we bought it on here, it basically would have fell all the way back down there, and would have felt that, listen, I'm not really making any money. You need to have the patience for the share to basically recover. Okay, so it needs to recover, go back up. It's going to fall a bit. It's going to go back up, fall a bit. All right, it's going to be a continuous up and down movement with an investment. Where with the trade, you want to get in quick and get out quick. Okay, where with investment, it's no getting in, getting out quick. Okay, it's going to take time for a share to recover. If you're doing a 2-month thing, then I would understand. So let's say, for instance, a short-term investment. I'll buy down here and then I sell up there. That's fine. All right, then I would have a strict stop loss strategy in place, like a 5% or a 6% stop loss. If I've got a midterm, I can go 6% or about 8%. If I'm going long term, so that a share doesn't kick me out quickly, then I can go in from 8 to 10%. Okay, so I can change up my stop losses, all right, according to what I'm doing with the share, whether I'm going short term or if I'm going midterm. Okay, or if I'm going long term. all right, you can switch up what your stop loss is. So remember to make your stop losses a bit smaller. So the shorter your term is, the smaller your stop loss would obviously be. Okay. So we've already determined with the share that it's already had a breakout point. We've got a good trend. We've got the buy indications. Everything is looking good. Okay. Let's take another example. So let's take FSR this time. All right. So first trade, another triple buy indication. If I go to Charts IQ, okay, just remove all our lines. Right. So same thing with first trend. Right. You're going to do the same thing. You're going to go to your horizontals. You're going to pull in your horizontal lines. Okay. Your resistance line at the top. You've got your support line obviously at the bottom. All right, sometimes it will be a bit difficult to get your support lines. All right, so I'm going to use that bottom piece as my support line. So this is basically the channel which it's currently moving in between. Okay, it's already reached that point. Okay, so historical point. So this is another reason why we use support and resistance is for historical points. Because if a share only goes up until the historical point, and this is what investors would look at, if it reaches that historical point, all right, it might bounce on that point and come back down. So now what we want in this case is, because we saw that with ABG, it already broke through, but FSR has got a problem. It hasn't broken through yet. So what we would like it to do is give us that breakout. Okay, so everything else is looking good. So if I take my line once again, I've got that upwards direction. All right, I've got my upwards directions looking real good. All right, basically climbing stairs, so bullish divergence. And over here, I've also got bullish divergence. All right, so it looks like that it's already giving me a few indications that it still wants to go up. Okay, if there is unsurety, there's another tool that I'm going to show you, okay, that you can also use, because we've got a buy indication there, we've got a buy indication there, everything is looking good, and we've got another indication over there, basically with a 5-day moving average. 5-day moving average, so by the way, would be that last one over there. You can pull in the 10 and the 20 as well. So if you feel like you need extra indications just to see why it's actually giving us the triple buy indication, you can go to studies, moving average, add in, for instance, a 20, give it another color. There's a 20-day moving average. Go to moving average once again, change that up to 10, give it another color. Let's make this one white. All right, so then we've got those 3 lines basically moving together. So that's why we've got the triple buy indication, right? All 3 of them moving together in an upwards direction. So over here, for instance, you'll see that your 20-day and your 5-day crossed over in an upwards direction. Over here, eventually your 10-day joined the movement in an upwards direction. So all 3 of them are moving in conjunction in an upwards direction, which is good. Okay, if they move in conjunction in a downward direction like over here, okay, means that it's going to give you a triple sell indication. Okay, so that's why basically I look for sometimes triple sell indications, but that's why I use the other filters, like for instance greater than 0, greater than 200,000, greater than -15. If I take a triple sell indication, that it would be really close for those shares, basically yes, they're in a downward direction, but they're really close to basically crossing over in upwards direction. Okay, so another thing, as I said, that we can use is there is another tool that you can use just to have surety, because everything looks good, right? We want to know, is it going to break through, or is it basically at the end of its term? Is it on a peak, right? Is it going to bounce on that peak? We're going to go to studies, and we're going to pull up MACD. All right, so MACD stands for moving average, conversion, and diversion. Okay, click on it, create, and that would create the MACD for you. All right, so we can see that MACD is also a bit overbought. Okay, what we would have liked to see is a little bit of a lower MACD. Yes, it can still continue. It can still go for a long. It can for a long term. It can stay above this line, but it's really overbought. Over here, it was still really low to the 0 line. Okay, the 0 line basically acts the same as your 20 and your 80. Below 20, oversold. Above 80, overbought. Okay, both on RSI and stochastic. Here with the MACD, your 0 line is basically your overbought, oversold area. Below 0, oversold area. You want to buy in down there. Over here, you don't want to really be in because it can do anything from here. Okay, it can basically go down from here, or it can go up. But also remember that MACD is a lagging indicator, so it will always be behind what the RSI and the stochastic is doing. Okay. So it's always lagging behind a few days. But if we zoom in a bit, we can see that the lines are really close to each other. So anything can happen from here. So it would be a risky move to buy the share. What I would do is add the share to a watch list. But if it breaks through, okay, so it might struggle a bit for a few days or even turn around immediately, right? So it might struggle, like give us tomorrow another green candle that's just sitting on top of it, or another red candle just sitting on top of that top line, all right? So what I want to do is go here, click on my share, and then add to watch list. Okay, add to watch list, enter my comments. It's optional. You don't really need to if you don't want to. But what I usually do is I enter something like the date, right? Today's date. And then with the date, what I also add is I add my comment, for instance, waiting for share to break through through the resistance line. All right, or waiting for stochastic, waiting for RSI, stuff like that. So technical things that I enter there. All right, even fundamental stuff. Okay, I submit, and that would add it onto the watch list for me, which is basically at the top here. So my stocks and watch list. So to add it to your watch list. Okay. So that's the technical part of it. So support, resistance, trend lines, RSI, stochastic, and MACD. All right, and also looking out for your moving averages. So there's a lot of making sure what type of share you're selecting before you do the investment, because remember, you want this share to grow for a long term. Where with trades, it's more in a spur of a moment decision. You need to, same thing, look at for RSI, look at for stochastic, but it's going to be more with your trading. You're going to look at most of your indications through RSI. Okay, you're not going to use stuff like stochastic or MACD and stuff like that. You are going to use it for like a 5-day moving average, support and resistance. You're still going to use that to do your technical analysis. But with fundamentals, you'll need more tools, okay? Because you need to make sure that this investment is going to bring in money over the long term. Okay, this isn't a make quick money type of thing. With investments, it takes longer. Okay, because this would, for instance, be stuff that you use for pensions or university fees at the end of the day, or basically if you want to retire one day. Investment would be your best route to basically go. If you want the month-to-month income, then you'd rather do CFDs. Okay, but you can also mix and match the two. All right, go 50-50 on basically between CFDs and equity. All right, so fundamentals. Most of your fundamentals you're going to find on the software. If you can't find any fundamentals on the software, we're not going to block you and say, listen, you can't go to Google, you can't go to this, you can't go to that. Because I mean, remember, newspapers are basically there for everyone to read. These days you can read newspapers on the internet. You don't even need to buy it at the robots anymore. Okay. You can listen to the radio, you can watch TV, just for extra information on shares, which is all of those stuff is your fundamental gateways to information for a share before you buy it. Okay, if they mention something on TV or on the radio of a share, then obviously you've got the tool already to do your analysis. So if they say something about let's say of FSR, of FirstRand, okay, on the news, right, or any other media source, then you can go onto the software and do your technical analysis off of what they said, right, and make sure that whatever they said is true. Okay, if they said that the share company is doing good, but you going in, if you look at the charts and you say no, that it's actually doing bad, then obviously you're not going to go and buy the share because you did your technical analysis. Your technical analysis differs from what they said. But if whatever they said is true, all right, then it means, and your technical analysis basically says the same thing, then why not invest? Because the fundamentals agree with the technical. So on the software, if you go to research, all right, on the chart, all right, so you go to research, this will give you basically this page, right? Directors' dealings, dividends, financials, and market news. So now this is where you're going to do some of your fundamental analysis. So directors' dealings, for instance, you're going to see when last is there directors that actually bought into the company. Okay, we can see that on the 18th of the 5th was the last buy in. All right, before that was on the 11th of the 5th from the same person. Okay, so basically that director bought in twice within 1 month. Okay, then previously a director sold out. There we had directors buying in 17th of the 3rd. Okay, another director there. All right, so basically same director on the same day which bought in. Okay, so if there's basically within the same time period that you want to buy, and there is a few directors that basically bought in that basically in your time period, they bought and you wanting to buy, make sure that there is some directors actually also investing in that time period. All right. Dividends, another thing why you would want to invest is gaining yearly dividends. Okay, so it can either be once a year, twice a year, or 3 times a year. All right. In FirstRand, for instance, you'll see that in 2022, all right, 2021 to 2022, we had a final, we had an interim, we had a special, we had another interim now in 2023. Okay, so if it has a special in between, it means basically that this company is actually doing really good. All right, so you would have an interim with your interim year-end results. You'll have a dividend payout with your final, with your financial statements year-end results. You'll get a final, or you'll get a special in between. Okay, or sometimes even with the finals, you'll get a special, which they pay out a little bit more on the dividends. So dividends is basically just something like a thank you from the company, right, that you are investing with them, right? So they give you extra payout, but don't expect to get much if you are only putting something in like 250 or 1,000 rand or something like that, because it's going to be small amounts, or because this is basically what they pay in cents per share. Okay, so dividends in cents are 151. Have you 1 rand, 126? All right, so it's really low dividends on this company. Some companies basically have a little bit more. Okay, stuff that you can also look out for if you go and look at a company on the charts is at the top side here, right? DY, all right, the dividend yield. That's like 4 point. If we go to the current one over there, so the dividend yield on this one is a 4.21% on the price. Okay, really low percentage that you're gonna get out. All right, so what you're really looking for is anything higher than 5 on your dividend yield. Right, so the higher your dividend yield is, the higher your payout would be on your dividends. Okay, if you take for instance, I think it was British American Tobacco at some stage paid out like 15 rand per share. Okay, 17 rand per share, 18 rand per share. All right, which is a really good dividend, right? Because it was close to around about 8 on the dividend yield. All right, so the higher your dividend yield is, the more worth it would be to hold on to that share for a long term. All right, not only a year to 2 years, but like 3 years, 5 years time. Okay, so it means that you're not only gaining out of growth of the company, but you're also gaining dividends on a 6 months basis or a yearly basis, or even 3 times a year, depending on how good the company does. Right? And if they even do have a special, sometimes only not twice a year. Okay, but if 3 times, if you get a company with three times a year, then it's a real keeper. Okay, so that's basically it for this session. If you have any questions regarding equity, then you're more than welcome to give us a call. So as per usual, if you go to contact us and then contact us, there is our contact details, so the address, phone number, so that's the head office number, now 324 support numbers, so you can either call them, WhatsApp call them, or you can send them a WhatsApp, you can send them an SMS. You can even, if you've got Telegram, all 3 of those numbers have Telegram, you can even send them on Telegram a message. Or what you can do is you can just send us an email to info@sharetracking.com or support@sharetracking.com. Or if you don't want to do any of that, you want us to phone you back, just go to Need Support. You can ask a question, all right, into your name, contact number, email, message, submit, and we'll phone you back. All right, so I hope you have a wonderful evening further, and I hope to see you for the next one.